In the last 90 days, Florida condo inventory has shattered historical records, with some cities seeing a shocking 30% price drop.
The Surfside Laws deadline has passed.
And for thousands of owners, the bills are finally due, and they can't pay them.
To understand why these specific 10 cities are imploding, we have to look at the three massive waves crushing the market in late 2025. First, the Surfside effect. The deadline for the structural integrity reserve studies passed at the end of 2024. Now, in November 2025, condo boards are legally forcing owners to cough up massive reserves. We are talking about special assessments ranging from $20,000 to over $100,000 per unit, payable almost immediately. Second is the insurance apocalypse. Following the devastation of Hurricanes Helene and Milton in late 2024, premiums in coastal zones haven't just risen, they've tripled. In some towers, the master policy alone now costs residents $12,000 a year each. Third is the inventory flood. With carrying costs exploding, retirees on fixed incomes, and investors seeing negative cash flow are rushing for the exits simultaneously. But with interest rates still hovering near 6%, buyers have vanished. The result? A market gridlock, where sellers are slashing prices just to escape their HOAs. This isn't a correction. In these 10 cities, it is a full-blown liquidation event. We start our countdown in the Panhandle, specifically Pensacola and Panama City, where the affordable coastal dream has been completely erased. For years, this region was the budget-friendly alternative to South Florida, but that narrative died in 2025. In Pensacola, we are seeing some of the most shocking percentage drops in the state. Recent data shows median condo prices here have cratered by nearly 31% from their 2022 peaks. Why? Because the insurance risk here is no longer theoretical. After the relentless storm seasons of 23 and 24, insurers have effectively redlined older buildings near the water. Inventory in Pensacola has soared 90% year over year. It's a similar story in Panama City. Owners who bought vacation rentals hoping for Airbnb income are realizing the math is broken. Between the doubled HOA fees and insurance premiums hitting $8,000 annually, the rental income no longer covers the mortgage. Investors are dumping units en masse, flooding the MLS with listings that are sitting for 100 days or more. Coming in at number 8 is a city that isn't even on the coast, Orlando. You might think being inland would protect it, but Orlando's crash is driven by a different beast. The collapse of the condo-hotel model. Thousands of units near Disney and Universal were sold to investors as short-term rental gold mines. But in 2025, tourism spending has softened and saturation is at an all-time high. Occupancy rates for these units have dipped below 50%, while HOA fees have skyrocketed due to rising labor and maintenance costs. Prices in the investor-heavy zip codes around Lake Buena Vista are down roughly 10 to 15% this year. The mousetrap here is leverage. Many of these units were bought with variable rate loans or hard money. Now that the cash flow has dried up, we are seeing a spike in foreclosure filings and distressed sales. It's a bloodbath for the amateur landlord class. At number 7 is Florida's largest city by land area, Jacksonville. The condo market here is stalling out completely, with prices down roughly 11% to 22%, depending on the neighborhood. The issue in Jacksonville is a massive oversupply of aging riverfront condos that simply cannot keep up with the new safety regulations. Many of these buildings, constructed in the 70s and 80s, deferred maintenance for decades to keep fees low. That bill has now arrived with interest. We are seeing special assessments hitting $30,000 in buildings where the units are only worth $200,000. That is a financial death spiral. Buyers are looking at the math. A $1,700 mortgage plus a $900 HOA fee plus a special assessment loan and walking away. Inventory has jumped 60%, and unlike Miami, Jacksonville doesn't have the international cash buyers to soak up the excess. Number 6 is the epicenter of the post-hurricane hangover, the Cape Coral and Fort Myers metro area. This region is witnessing a catastrophic unwinding of the pandemic boom. Cape Coral, once the poster child for exploding property values, now has inventory levels nearly double what they were a year ago, up 95% in some sectors. Prices for condos here have dropped approximately 14 to 16%, with some older canal front buildings seeing value destruction of up to 30%. The issue is flood insurance. After the devastation of recent storms, flood insurance is mandatory and astronomically expensive here. For a $300,000 condo, you might be looking at $12,000 a year in total insurance costs. That completely destroys affordability for the retirees who make up the bulk of this market. We are seeing paralyzed construction sites where developers have just walked away, and for sale signs are the only thing growing in the front yards. Halfway through our list at number 5 is Punta Gorda. While it gets fewer headlines than Miami, the data here is terrifying. Reports from late 2025 indicate Punta Gorda is seeing year-over-year price declines of nearly 19%. The steepest drop in some datasets. This is a market heavily reliant on fixed-income retirees, a demographic that simply cannot absorb a 400% increase in HOA dues. There is a silent crash happening here. Listings aren't just sitting. They are expiring unsold at record rates. Sellers are cutting prices by $50,000 and still getting zero showings. The buyer pool for 1980s condos in Hurricane Alley has evaporated. If you are trying to sell a unit here without full reserves and a new roof, you basically have to give it away. Number 4 brings us to the wealthy Gulf Coast enclave of Sarasota and its neighbor, Bradenton. For a long time, people thought Sarasota was bulletproof because of its high net worth residents. They were wrong. The condo market here is currently recalibrating to reality, which is a polite way of saying prices are down about 13% and inventory is up over 60%. Even on the luxury barrier islands, the math has shifted. Buyers who can afford a $2 million condo are smart enough to read a balance sheet. They're seeing these massive reserve deficiencies and demanding price cuts of 20% or more. In Bradenton, the middle market condos are getting hammered even harder, with values down nearly 11%. The snowbird arbitrage, buying a place for winter and renting it out, is dead. The carrying costs now exceed the rental potential, and everyone is trying to sell at the same time. At number 3, we have Tampa. The Tampa Bay area was one of the hottest markets in the country in 2021, but the cool down here has been brutal. Condo prices are down between 10 and 25%, depending on the building age. The specific killer in Tampa is the insurance premiums for Bayside high-rises. Insurance for some of these waterfront towers has tripled, pushing HOA fees from $500 to over $1,200 a month overnight. Inventory has ballooned by 85%, reaching levels we haven't seen since the Great Recession. We are also seeing a massive pullback from institutional investors who were buying rental portfolios here. They are now dumping that inventory, undercutting individual homeowners. If you're selling a condo in South Tampa or near Bayshore without a fully funded reserve account, you are in for a very long wait. The runner-up for the worst market in 2025 is Fort Lauderdale. This city is famous for its condo canyon of high-rises, but right now, it's a canyon of unsold listings. Inventory for condos and townhomes here has exploded. Some reports show a 300% increase in active listings compared to the lows of 2022. We are firmly in a buyer's market with over 10 months of supply. Prices are down about 10% year over year. But that average hides the real carnage in buildings aged 40 years or older. In those older buildings, units that sold for $400,000 2 years ago are struggling to get offers at $300,000. Because of the looming structural assessments, buyers are terrified of getting hit with a $50,000 bill the month after closing. The liquidity in the Fort Lauderdale market has completely dried up for anything built before 2000. And the number one city where condo prices are crashing fastest in 2025 is St. Petersburg. This is ground zero for the Florida condo crisis. The statistics here are staggering. Earlier this year, inventory spiked by a mind-blowing 164%. More recent data for late 2025 confirms that median condo prices have dropped nearly 16% year over year, with some neighborhoods seeing declines of 25% or more. St. Pete has a high concentration of older, mid-rise condos that are being absolutely crushed by the new state safety laws. We are seeing stories of HOA fees jumping from $400 to $1,400 a month. Retirees are literally walking away from their units because they can't sell them and they can't afford to keep them. It is a mass liquidation event. If you want to see the future of the Florida condo market, look at St. Petersburg right now. It is a buyer's paradise, but a seller's graveyard. So, what does this mean for you? If you are a buyer, 2026 is shaping up to be the opportunity of a decade. We are approaching a point of maximum pessimism. Cash buyers who are willing to navigate the complexities of reserve studies and engineering reports will be able to pick up units for pennies on the dollar, potentially 40 to 50% off-peak pricing in the hardest-hit older buildings. However, the risks are enormous. You aren't just buying a condo, you are buying its liabilities. For sellers, the hard truth is that waiting might not help. The inventory glut will take years to clear. And as more buildings complete their milestone inspections in 2026, more special assessments will hit the books. We are also likely to see a wave of decondoing, where developers buy out entire failing associations to bulldoze them and build luxury rentals. The middle class of Florida condo ownership is being wiped out, replaced by ultra-luxury new builds and corporate-owned rentals. The era of the affordable Florida retirement condo is officially over. The Florida condo market has fundamentally broken. The prices you see listed on Zillow today are already history. The real market is happening in the panic selling behind closed doors. If you're in one of these 10 cities, check your reserve study immediately. The storm isn't coming. It's already here.